Who can actually afford a $500,000 home in 2026? The math nobody shows you. It's late at night. You open Zillow just to look, and within 5 minutes, you feel personally attacked. Every house that isn't falling apart costs $500,000. Not a dream home, not a luxury property, just a very normal house with outdated cabinets, beige carpet, and a backyard that's barely big enough to turn around in. And at some point, a quiet thought creeps in. Am I bad with money, or is something seriously broken? Let me be clear right now, it's not you. It's the math. And today, we're going to do what almost nobody in the housing industry wants you to do. We're going to calculate who can actually afford a $500,000 home in 2026. Not who a bank will approve, not who a realtor says is doing great, but who can buy one without living in constant financial stress. Because qualifying for a mortgage and affording a home are two very different things. Why $500,000 is the new normal, but shouldn't be. In many US cities right now, $500,000 is no longer a luxury price. It's the entry fee. Denver, Austin, Phoenix, suburbs outside major metros. $500,000 gets you a modest average house. And that's the problem. The median household income in the US is roughly $84,000. Yet we're expecting households earning that amount to afford homes that cost 6 times their annual income. Historically, healthy housing markets sat around 3x income. 6 times income isn't tight. It's structurally unsustainable. But the market keeps insisting it's fine. The first wall, the down payment illusion. Let's start with the biggest myth. Just save for a down payment. On a $500,000 home, 20% down equals $100,000 in cash. The median American household savings? Around $8,000. That's not a small gap. That's a canyon. Even if a household earning $84,000 somehow saves 10% of gross income every year, which is extremely optimistic, that's $8,400 per year. It would take 12 years to save the down payment. And that assumes no emergencies, no market appreciation, no rent increases. In reality, the target keeps moving faster than people can save. Just put less down, the hidden penalty. So most buyers don't put 20% down. They put down 5, 10%. That unlocks a hidden cost, PMI, private mortgage insurance. PMI is not protection for you. It protects the bank, and it costs $200, $400 per month, every month, until you reach enough equity. You're paying extra because you weren't rich enough up front. That's the starting position, the real monthly cost. Nobody advertises. Let's assume purchase price $500,000, down payment 10%, $50,000, loan $450,000, interest rate tilde 6.5%, monthly cost, mortgage, principal plus interest, tilde $2,800, property taxes tilde $500, home insurance tilde $300, maintenance 1% rule, tilde $417, PMI, tilde $300, total tilde $300 per month. And that's before HOA fees, repairs, major replacement. This isn't worst case. This is normal. What income actually makes this affordable? Financial planners recommend housing, each 28% of gross income. Banks allow up to 43% debt to income. Let's reverse the math. To keep $4,300 at 28% of income, you need about $187,000 per year. Even using the bank's risky standard, you still need about $150,000 per year. Only about 10–20% of US households earn that much, which means for most Americans, a $500,000 home is not affordable by definition. But people are buying. Who are they? 3 groups. Dual high-income household, family money, inheritance, people stretching themselves dangerously thin. That third group is bigger than anyone admits. Let's look at what stretching actually looks like. A realistic household example. Meet a household earning $160,000 combined. That sounds solid. Upper middle class. Doing well. After taxes, benefits, and modest retirement contributions. Take-home pay $9,500 a month. Subtract housing, $9,500. $4,300 equals $5,200 left. Now life happens. 2-car payment, $800. Car insurance, $250. Gas, $300. Student loans, $600. Health insurance, $400. Grocery, $800. Utilities and internet, $450. Remaining tilde $1 $600. That's for emergencies, savings, clothing, medical costs, kids, any enjoyment of life. This household is spending nearly half of take-home pay on housing. That's not comfort. That's constant pressure. What house poor actually feels like. It feels like checking your bank balance before groceries, delaying car repair, financing medical bills, anxiety every time something breaks, the HVAC failed, the roof leak, someone loses hours at work. Every event becomes a crisis, and this is happening to households earning well above average. Why the system pushes you anyway. Here's the uncomfortable truth. Banks profit from loan. Realtors profit from prices. Sellers profit from comp. Nobody profits from telling you this doesn't make sense. Once you buy, you're locked in. Selling costs money. Walking away destroys credit. So people stay stressed, overworked, house rich, life poor. This is not personal failure. Home prices since 1990 tilde 400% increase. Median income growth tilde 180%. The math broke. You can't budget your way out of that. You can't side hustle fast enough. You can't manifest affordability. This is structural. What actually builds wealth? That nobody market. Real wealth is margin, flexibility, low stress, consistent investing, not maxed out housing payment, constant anxiety, zero saving. There is no trophy for being house poor. The real question you should ask, not can I get approved, but will this house improve my life or dominate it? If your household income is under $140,000, a $500,000 home is likely a financial trap. That doesn't make you a failure. It makes you realistic. Your permission slip. You're allowed to keep renting, buy cheaper, move market. Wait, you're allowed to opt out of a broken game. Sometimes the smartest move isn't buying. It's not drowning yourself to keep up appearance. Final truth. The housing market will keep pretending this is normal. Banks will keep approving risky loans. Social pressure will keep whispering, buy now. But math doesn't care about vibes and the real numbers. Protect your peace. Choose sustainability over status. Because the real American dream isn't home ownership at any cost. It's freedom.